Hello fellow chipmunks, I am Mr. Chipmunk, the founder of the company $awardingchipmunk.com, the only place that you will find the toughest concepts of finance and investment broken down into simple chipmunk language. Enough promos. Now, let's talk about the real stuff. SVB has just collapsed. What the hell happened? Why it happened, what it means to you and how to save yourself now. This is the US's biggest bank collapse since the 2008. If this is your first time hearing this, then hold on to your hat. The Silicon Valley Bank, SVB, which is the 15th largest bank in the USA, has its stocks down 60% right now, and the Fed has seized all SVB assets worth $232 billion. Before going into detail, just take a moment to subscribe because it will help me feed my chipmunk family. Okay, first, let us understand how a bank works. Banks work on what we call a fractional reserve system. For example, Ben gives bank $100, Sam gives bank $100, and John gives bank $100. Bank only keeps $30 in case Sam, Ben, or John come to withdraw and loan out or invest the remaining $270. This is how all the banks in the world function. SVB also invested out customer money in same way, but in some bad investments. They bought huge amount of bonds when interest rates were very low during COVID. What is a bond, you ask? Well, a bond is just a type of loan that is given to governments, companies, etc., who then pay you a fixed interest until a fixed time, and at the end you get your money back. At least, that is what was supposed to happen. In case of SVB, they were too optimistic, and so they bought long-term bonds during COVID thinking Fed will not raise interest rates as high as they have been. But Fed raised interest rates and they raised it real bad. Interest rates go up, SVB's bonds value goes down because now anyone can get more interest from other bonds than what SVB is getting from their bond. When customers started to know this, SVB's trouble began. Customers now got scared and scrambled to get their deposit back. But remember, banks only have 10% of all deposits. Now SVB was in deep trouble. The only option they had was to sell those bonds that had gone down in value at a loss to get the money to pay the customer withdrawals. They scrambled to get money from everywhere but failed. Selling those bonds was still not enough to pay all withdrawals, as total client deposit amount with SVB was equal to $342 billion and all its assets combined only just over $200 billion. Now all of a sudden customers are in big trouble? You wanna know why? Because only 2.7% of that all the client fund was FDIC insured. What is FDIC insured? FDIC is a body in the US that insures any one customer up to $250K if any bank were to go bust. So this means 97.3% of customers wait until all court matters solved to get their money back as it goes through all the proceedings. Now comes the billion-dollar question, no pun intended of course. What exactly does all this mean to you? SVB customers were not like you and me, but mostly tech companies. And now, more than $300 billion of assets of these companies are locked up. With this, these companies are the ones that are actually in trouble. What will happen to their payroll? What will happen to their rent? What is happening to the survival of the business itself? Many of these companies can go bust if they don't have the runway to survive till they get their assets back. If they are not able to operate, then it means they also can't pay their loans in other banks they may have loan in. That is a big punch to the economy. SVB may also have other loan money to pay to other banks that will also be short that amount. All of a sudden, everyone is in big trouble. Just a few days ago we saw February's job report say US added 311K new jobs, but the now companies are going to take a hit, so nobody knows what's going to happen to March jobs. What will happen to new jobs if you happen to be looking for one? Jobs is major macroeconomic factor that influences interest rate, which drives the whole economy. So this incident may affect that too and have impacts at levels we haven't even imagined yet. All that being said, it is all too early just yet to say anything, and all we can do is wait and see the impact. So what can you do today? First, take a deep breath. SVB was a small bank and also very stupid to put all its eggs in one basket. Make sure you are not stupid. You need to do a couple of things to save yourself from the ripple effect of this as much as possible. Do not put money in niche and smaller bank, but in larger banks with stronger financials and a diversified investment. How do you know? Well, they need to let you know. This information is public, so just search online to find out their financials. Second, make sure to never keep more than the insured limit for deposits in your country in any one account in any one bank. For example, $250K is the limit in US and $100K in Canada. You can also find this information online or just call the bank and ask. They are required to tell you. Stay informed and stay alert. Please remember, this is not financial advice. The Dollar Hoarding Chipmunk makes tough things simple to understand, so subscribe to us on YouTube, Facebook, Instagram, Twitter, Reddit and Pinterest to give your brain a less hard time to understand tough things.